Well, it has been a good quarter for the non-bank lenders. The NI growth has been healthy, led by the fact that AUM growth was healthy for them as well. Now, earnings have largely been led by lower provisions as well. So, improvement in asset quality continued. Outlook remains healthy despite the fact that some pockets are witnessing asset quality issues. So, for housing finance companies, the AUM growth was about 7.7% YOY and about 3.7% sequentially. In this, if you remove LIC HF AUM growth, the overall AUM growth in housing finance companies was strong at 17% YOY and more than 7% sequentially. NI growth was healthy as well, so the NI improved by 12.5% YOY and about 5.3% sequentially, leading to the fact that calculations showed net interest margin expanded both YOY and quarter-on-quarter to 3.58%. Now, OPEX was high due to rise in other expenses. Operating profit growth was healthy despite the rise in OPEX. So, operating profit growth was 20.8% YOY and nearly 6.5% sequentially. Provisions declined by more than 14% quarter-on-quarter, leading to PAT growth for housing finance companies at 8% YOY and 4.8% sequentially. Asset quality that continued to improve. Value-wise, gross NPA was down 15.8% YOY and net NPA was down more than 37.5% sequentially. Gross NPA ratio as a result declined to 2.73% versus 3.37% in the previous quarter, and net NPA ratio came in below the 1% mark when compared to 1.6% in the previous quarter. So for NBFCs, the AUM growth in Q4FY24 was strong at 20.75% YOY and about 5% sequentially. NI growth was healthy as well. Q4 showed that the overall NI growth was about 24.3% YOY and more than 5% sequentially. So the calculation shows that net interest margin expanded both YOY and quarter-on-quarter to 6.57%. OPEX was high due to the fact that employee expenses increased for them. Employee expenses were up 35.7% quarter-on-quarter. Provisions were up 36.9% YOY, but it declined by more than 14% on a sequential basis, which resulted in PAT growth of 28.7% YOY and about 38% sequentially. Now, PAT of NBFCs was largely led by Piramal Finance, which reported a net profit of 138 crore in Q4 FY24 when compared to loss in Q4 FY23 and a loss that they reported in Q3 FY24 as well. Asset quality improved, so gross NPA ratio was at 11.5% when compared to 11.95% in the previous quarter. Net NPA ratio declined as well to 4.35% versus 4.5% in the previous quarter. Now, managements have said that microfinance book has come under some pain in the H2 FY24 that we saw. Asset quality deterioration was seen over here in H2 FY24, where lenders have seen their gross NPA rise by more than 32% in H2 alone. Now, with decline in unsecured loans growth, loan growth can actually come under some pressure for some of the lenders who are focused over there. RBI has been asking lenders to diversify their borrowing mix. This can impact the growth rate as well. Now, low base effect has played out. Inflation and high rates can impact growth in the near term for some of them as well. Affordable housing boost that came in from government actually provides opportunities for housing finance companies to grow at a healthy rate for the next couple of quarters.